Let's welcome in Yahoo Finance's Jennifer Schonberger. Jen.
Hey, Jared. Dallas Fed President Logan doubling down that she sees lowering interest rates, quote, gradually, citing an increased risk that the job market could worsen and a danger inflation could heat back up again. Speaking this morning in New York at the SIFMA annual meeting, Logan said, quote, if the economy evolves as I currently expect, a strategy of gradually lowering the policy rate toward a more normal or neutral level can help manage the risks and achieve our goals. The comments echoed those she made 2 weeks ago, roughly. Logan noted that the downside risks to the job market have increased despite a stronger than expected jobs report for the month of September that caused traders to question whether the labor market was gaining more strength. Logan is the latest in a string of Fed officials to stress moving gradually. Last week, recall Fed Governor Chris Waller said the Fed needs to proceed with, quote, more caution, while Minneapolis Fed President Neel Kashkari said it's, quote, likely the central bank will make modest interest rate reductions in the coming quarters. We will hear from Kansas City Fed President Jeff Schmid tonight. And guys, I expect him to be hawkish. Back to you.
And Jen, according to Torsten Slok, chief economist at Apollo, parent company of Yahoo Finance, of course, says increasing chance the Fed could actually hold in November. What do you make of that?
Yeah, you guys taking a poll here of that. I mean, that seems to be his interpretation of the Fed saying that they're going to move gradually, right? We've heard a chorus of officials note that over the past week and a half or so. But I think that's Fed officials tempering the excitement that investors had around that 50 basis point rate cut at the September policy meeting, basically saying, hey, we're not front loading here, folks. Like, we're going to move at a gradual pace of 25 basis points, which is the path that they have laid out. Now, can I see a mounting case to sort of hold back or pause, given the most recent economic data that's clocked in stronger than expected, whether it's been the jobs report, warmer inflation, retail sales? Sure, but I think Fed officials are looking more at the longer term trend, and they would need to see a slew of stronger than expected data over the next couple of months for them to pause. I think at this rate, they still execute with a 25 basis point rate cut in November.
And to your point, Jeff, we just spoke to Emily Rowland. She said that same thing. She thinks the Fed just keeps up that slow, steady pace with inflation just not where they want it just yet. Thank you, Jennifer. Appreciate it.
Yeah, and Josh, I'll just add one more thing. If you look at Fed fund futures, they're pricing in a better than 80% chance that the Fed cuts by 25 basis points in November. And any time Fed funds futures have better than 80% probability, the Fed generally goes.
Good context. Thank you, Jennifer. Appreciate it.